India's got some truly staggering energy ambitions. We're talking 500 gigawatts of renewable power by 2030. It's a huge headline
It
number.
really is.
But what's actually, making this massive shift possible down at the nuts and bolts level?
Exactly. And that's what we're diving into today. It's a seemingly small piece, but absolutely pivotal, the core of power transformers.
Transformers.
Yeah, think of it as the silent engine really driving efficiency in our electrical grid.
Okay, transformers, we see them everywhere, those humming boxes. But why are they so critical, especially for this big renewable energy push?
Well, they're basically the essential go-betweens in the power system. They step voltage up or down efficiently.
Right?
For long-distance transmission, you need high voltage. For local use, you need low voltage. Transformers do that conversion. Without them, moving all that power around, just not feasible. They're vital links in the chain.
Okay, so what's the sort of magic ingredient inside these transformers that we really need to understand for this?
That would be cold-rolled grain-oriented steel, CRGO for short.
CRGO.
It's a very specialized type of electrical steel. It's used to build the transformer's core. Now, cost-wise, it might be, say, 25 to 30% of the transformer's total cost.
Okay, that's significant.
But its impact on cutting down energy loss and boosting performance, it's huge, way bigger than its cost share suggests. It's the heart of the transformer's magnetic circuit, really.
So if we want to really get a handle on how India's energy transition is actually playing out on the ground, we should look at the companies making these CRGO steel cores. Is that the idea?
Precisely. We're going to zero in on two key publicly listed Indian companies in this space. Velas Transcore Ltd, VTL, and JB Laminations Ltd, or JBL.
VTL and JBL.
Yeah. As pretty much the only listed players purely focused on these CRGO cores, they give us a really fascinating window into the whole Indian transformer industry's growth, kind of like a proxy for it.
All right, so our mission for this deep dive is clear then. We want to understand how VTL and JBL are set up to benefit from India's massive electrification effort, the big push into renewables, and this constant need for more efficient transformers. Let's get into it.
Okay. So to really appreciate the opportunity for companies like these, we first need to grasp just how big India's electrification landscape is and how ambitious the plans are.
Yeah, I mean, you've got a huge population, it's growing, you've got rapid urbanization, more people moving to cities needing power.
And rising living standards, too. People are using more appliances, demanding more electricity per person. It's all converging.
A perfect storm for energy demand.
Absolutely. And the government isn't just watching this happen, they're actively fueling it. There are robust policies like the National Electricity Plan 2023.
Yeah.
And huge financial commitments. We're talking over $300 billion pledged towards modernizing and expanding the power sector.
Wow, 300 billion. That's an enormous number.
Yeah.
So where does India stand right now in terms of actually generating all this power?
Well, as of fiscal year 24, the total installed capacity was around 443 gigawatts. That's grown at about 4.5% per year since FY19, which is pretty healthy.
And renewables are a growing part of that.
A big part. They now make up about a third of that total capacity. The shift is definitely happening.
But is that generation growth keeping up with how fast demand is rising?
Not quite. Generation has grown, yes, about 5.5% annually between FY19 and FY24. But demand, especially during peak times, is still sometimes outpacing supply.
Right.
We actually saw peak power demand hit 243 GW in FY24. That points to a deficit during those peak hours.
So the need for more generation capacity is clearly still there. What about individual consumption? How much electricity is the average person using?
Per capita consumption hit about 1,395 kilowatt hours in FY24. Now, that's progress, but it's still, quite a bit below the global average.
Which means there's still a lot of room to grow.
Exactly. That gap highlights the potential. As more homes and industries get reliable power, usage will likely keep climbing.
And the renewable sector itself. We hear so much about solar, wind. How's that progress looking?
It's been pretty remarkable, actually. By October 2024, India had installed over 200 gigabalu of renewable capacity.
100 gigawatts.
Yeah. Solar is leading the charge over 90 gigawatts. Then you have wind, hydro. Altogether, renewables are now about 46.3% of the total installed capacity.
Wow, almost half.
Almost half. And if you exclude the really large hydro projects, the growth in just solar and wind and other renewables has been very impressive, about 16.1% compounded annually between FY19 and FY24.
That's serious growth. And the government is pushing this hard with specific schemes, right?
Oh, absolutely. There's a whole suite of initiatives, things like the production-linked incentive, the PLI scheme for making solar panels panels domestically.
Right, boosting local manufacturing.
Exactly. Then there's the PMCO USM program for solar pumps in agriculture, the National Green Hydrogen Mission. It's all geared towards hitting that big 500 GW non-fossil fuel target by 2030.
So looking forward then, what are the forecasts for electricity demand? Where is it headed?
The projections show a significant surge. They're anticipating demand hitting nearly 2,500 billion units BU by fiscal year 32. That's up from about 1,600 BU in FY23.
A huge jump.
Massive. And it means a huge amount of new generation capacity needs to be built. The National Electricity Plan estimates about 63 GWU needed by FY27, and then another 233 GWU between FY27 and FY32.
That kind of plan to build out must be attracting a flood of investment, especially into renewables.
It certainly is. If you look at planned capital expenditure capex just in renewable electricity projects, it's exploded. It went from around 10 trillion rupees in FY20 to over 22 trillion in FY24.
But generating the power is only half the battle, isn't it? You've got to get it to people. The grid itself.
Precisely. The transmission and distribution infrastructure, the T&D network, is absolutely critical. India has an extensive grid already, but it needs major upgrades and expansion.
Why? To handle the increased load.
Yes, and also to handle the nature of renewables. They're often geographically spread out, sometimes intermittent. So the grid needs to be smarter and more robust.
Makes sense.
The current plan is to expand the transmission network to nearly 650,000 circuit kilometers by 2032. That's estimated to require something like 9 trillion rupees in investment. Huge numbers.
And are there specific government programs targeting this T&D infrastructure, making the grid stronger?
Yes, several key ones. There were schemes like DDGJY and IPDS, which are now sort of folded into the revamped distribution sector scheme, or RDSS.
RDSS.
A big goal of RDSS is cutting down what they call AT&C losses. That's technical losses plus commercial losses like theft, down to maybe 12–15% by FY25.
Improving efficiency, reducing waste.
Exactly. And then you have things like the Green Energy Corridors project, which is specifically designed to help integrate all that new large-scale renewable energy into the national grid effectively.
So it feels like the fundamental drivers for future electricity demand in India are really solid, very well defined.
Oh, absolutely. Beyond just the government policies, you've got these powerful underlying factors. Population growth, urbanization, more industry, more appliances, general infrastructure development.
And the EV push, right?
And the big push towards electric vehicles. That's going to add a whole new layer of demand, especially on local distribution networks.
Okay, so demand is clearly rocketing upwards. Now, let's bring it back to transformers and this crucial CRGO steel. What's their specific role in making all this happen?
Right. So transformers, as we said, they manage the voltage. You need them for the big, high-voltage transmission lines carrying power across the country.
Power transformers, you call those.
Exactly. Power transformers. Big capacity, high voltage. And then you need them for the local distribution networks that bring power to homes and businesses. Those are distribution transformers, lower voltage, smaller capacity.
Okay. And the CRGO steel core, where does that fit inside the transformer? What does it actually do?
The core is basically the magnetic heart of the transformer. It's usually made from stacks of thin steel sheets insulated from each other. This core creates the magnetic pathway.
The magnetic circuit.
Right. That allows electrical energy to be transferred efficiently from one coil, the primary winding, to the other coil, the secondary winding. The windings themselves, usually copper or aluminum, are also a big cost component, maybe 20–25%.
Okay.
But the core, especially a core made with high-quality CRGO steel, is absolutely vital for minimizing energy losses during that transfer process.
So what's special about CRGO steel? Why is it so good for this?
It's engineered specifically for its magnetic properties. During manufacturing, the grain structure of the steel is carefully aligned or oriented, hence grain-oriented. This specific orientation dramatically reduces what are called core losses. There are two main types: hysteresis losses.
Which is?
Energy losses, the magnetic domains inside the steel flip back and forth with the alternating current. And eddy current losses, tiny circulating currents induced within the core itself.
Right. Wasted energy, basically heat.
Exactly. CRGO steel minimizes both of these losses significantly. Think of it like reducing friction in a machine. Less friction means less wasted energy, higher efficiency.
And you mentioned it's a big chunk of the transformer's cost.
Yeah, interestingly, CRGO steel is often the single biggest material cost, typically around 30–35% of the total cost of making the transformer.
Wow. So its availability and price must have a huge ripple effect?
Absolutely. It heavily impacts the economics for the entire transformer industry.
So are there any challenges right now with getting enough CRGO steel in India?
Yes, there are some things happening. India has its own standards. The Bureau of Indian Standards, BIS, that imported CRGO has to meet.
Okay.
And recently, there have been reports about export licenses for some major Chinese CRGO makers either expiring or maybe not being renewed smoothly.
And India imports a lot of CRGO.
Yeah, from places like China, South Korea, Japan, Europe. So if supply from a major source gets tricky and all imports need that BIS certification, it can create a bit of a bottleneck, some uncertainty.
What happens if there's a shortage? What are the knock-on effects?
Well, the immediate impact could be price hikes for CRGO steel itself. That directly pushes up costs for transformer manufacturers.
Which they might pass on.
They might have to, which could affect the distribution companies, the discoms, buying the transformers. And, in a worst case scenario, if manufacturers really struggle to get the materials, it could potentially slow down some of these big power infrastructure projects.
Do we know roughly how much CRGO India needs each year?
The estimate is around 325,000 tons annually. And importantly, there's apparently a particularly tight supply of the higher grade stuff called high B CRGO.
IB, why is that important?
That's the grade you need to make the most energy efficient transformers, the ones that meet the toughest standards for minimizing losses.
Right. And globally, how much CRGO is produced?
Total global production is maybe around 3 million tons a year. China is the big player here, making something like 45% of the world's supply.
And it sounds like the demand for this better quality high-B grade CRGO is only going to increase in India, right?
Absolutely correct. The Bureau of Energy Efficiency, or BEE, they've mandated stricter star rating requirements for distribution transformers.
The energy efficiency labels we see.
Exactly. Those are getting tougher starting January 1st, 2025. To meet these higher star ratings, manufacturers will need to use more of this premium, high-efficiency CRGO steel.
Okay, so looking beyond just the immediate supply issues, what are the bigger, longer-term things driving growth for CRGO steel in India?
Well, beyond the basic rise in power demand, you've got several strong trends. Continued infrastructure building in T&D, all the investment in renewables needing grid connections,
Industrial growth.
industrial expansion, yeah. Then there are things like smart grids being rolled out, which often require more sophisticated transformers, plus those stricter energy efficiency rules we just mentioned.
And EVs again?
Definitely EVs. More charging stations mean more stress on local grids, often needing upgrades and new transformers. Even things like new materials being developed, like amorphous or nanocrystalline cores. While they aren't CRGO, they show the whole industry is focused on cutting losses, which indirectly reinforces the value of high-quality magnetic materials like CRGO.
Okay, this gives a really clear picture. Growing demand for power, meaning growing demand for transformers, and the critical need for this high-quality CRGO steel. So now, let's really zoom in on those two companies. Velos Transcore, VTL, what makes them stand out here?
Right, VTL. As we said, they're one of only 2 listed companies in India that are basically just making CRGO laminations for transformer cores. A pure play.
And why is that significant?
It positions them really well. As the market demands higher quality and reliability, the big transformer makers tend to favor established, organized suppliers like VTL over smaller, maybe less consistent, unorganized players.
Makes sense. Quality control is key. And where are they based? Does location matter?
It does. VTL is strategically located in Gujarat.
Which is a major hub for making transformers.
Exactly. It's considered the main transformer manufacturing hub in India. So being right there gives them great logistics, close ties to customers. It's a definite advantage.
What's their current operational status? Are they busy? And what are their plans?
They're running pretty much flat out right now, around 90% capacity utilization on their existing 12,000 metric tons per year capacity.
Wow, 90%.
Yeah, and because demand is so strong, they're making a big move. A major capacity expansion project is underway. They're aiming to triple their CRGO lamination capacity to 36,000 tons per year by April 2025.
Triple capacity, that's huge. What could that mean for their revenue?
Well, management estimates that this tripling, once the new capacity is up and running efficiently, could potentially add something like 600 to 700 crore rupees in incremental revenue.
That's a big jump. And VTL isn't just sticking to CRGO cores, right? They're looking at other things too.
That's right. They're strategically diversifying, looking at other key transformer parts like radiators, the cooling fins you see on transformers.
Okay.
And they're also exploring more advanced core materials like amorphous alloys and nanocrystalline materials. The long-term idea is to become a broader supplier of various transformer components.
It sounds like analysts are pretty bullish on VTL then.
Generally, yes. For instance, Phillip Capital, a brokerage, started covering them recently with a BUY rating. Their target price, back in April 2025, suggested quite a bit of potential upside. Of course, that's just one analyst view based on their model.
Sure. Who are their main customers right now?
They've got strong ties with major transformer companies. Voltamp has historically been a very big customer, maybe taking around half their output,
Okay.
but also companies like Electrotherm, Schilchar. And with this new capacity coming online, VTL has said they plan to target over 70 new potential clients to broaden that base.
What about their finances? Are they loaded with debt for this expansion?
Actually, they seem to be in a pretty strong financial position. They're currently net debt-free.
Meaning more cash than debt.
Exactly, good cash reserves. And they did an IPO, an initial public offering, back in June 2024. The main reason for that was to raise money specifically for this big capacity expansion and other growth plans.
So the financial projections look good, assuming the expansion goes well.
Yes, based on these plans and the strong industry outlook, analysts are projecting pretty robust growth. Phillip Capital, for example, was forecasting significant jumps in revenue, EBITDA, and profit by fiscal year 2027. Very healthy projected growth rates.
And moving into things like radiators and these newer core materials, that helps margins too.
That's the expectation, yes. Those products generally carry higher profit margins than the standard CRGO laminations. So diversification isn't just about more revenue, it's also about better profitability. And being net debt-free gives them a solid foundation to pursue this.
What's the main risk here? What should people watch out for with VTL?
The big one that gets highlighted is execution risk. That capacity expansion is really ambitious. Tripling production isn't trivial.
Right.
So any delays in getting the new lines running or any problems ramping up production efficiently, that could definitely impact their growth and financial targets. That's the key thing to watch.
Okay, that's a great overview of VTL. Now let's shift to the other main player we identified. JB Laminations, JBL. How do they compare? Where do they fit in?
Right, JBL. Like VTL, they're a listed Indian company focused mainly on CRGO laminations for transformer cores. Their main base is in Noida, in Uttar Pradesh.
And are they also expanding capacity aggressively?
Yes, they are also ramping up significantly. They recently increased capacity from around 11,700 tons per year up to 20,000 tons as of March 2025.
So a big jump there too.
A big jump. And they've indicated plans to scale further, potentially reaching 25,000 to 30,000 tons by fiscal year 2026. They're targeting strong volume growth, aiming for something like a 30% CRGR over the next 3 years.
And like VTL, are they looking beyond just CRGO cores? Diversification?
Yes, they're also evaluating possibilities in adjacent areas that could mean making other transformer parts or perhaps even down the line looking at manufacturing complete transformers themselves. It seems to be on their radar.
Who are some of JBL's key customers?
They also have a strong client list, including some big names: BHEL, Virat Heavy Electricals, Crompton Greaves, Schilchar Technologies, Indotech.
So established players.
Definitely. And the end users of transformers with their cores include major utilities like Adani Power and state transmission companies like KPTCL and Karnataka. Like VTL, they're also focused on broadening their customer base, not being too reliant on just a few clients.
I remember reading something about JBL getting approvals for higher voltage applications. That sounds important.
It is very important, yes. They've secured approvals for their components to be used in transformers up to the 400 kilovolt, 400 kV level from PGCIL, the national grid operator.
Okay.
And crucially, they're actively working on getting approvals for the 765 kV class. That's the highest voltage level used in India.
And why does that matter so much?
Fewer players operate in those ultra-high voltage segments. The technical requirements are tougher, the quality standards are higher, so there's less competition, and typically better profit margins to be made. It opens up a valuable niche.
How has JBL's financial track record been lately?
Pretty strong. Between fiscal 22 and 24, they showed really impressive growth revenue CAGR of 46%, EBITDA up 59% annually, and profit after tax growing at 77% per year.
Wow, those are big numbers.
They are. And they also maintain a healthy balance sheet, not much leverage. As of the first half of FY25, their debt was quite low, roughly balanced by their cash on hand.
Sounds like JBL is also focused on running a tight ship operationally.
Very much so. They're actively working on things like reducing lamination wastage during production. Every bit of steel saved helps the bottom line.
Sure.
They're also increasing how much CRGO steel they source domestically and making a strategic push towards selling more of the higher grade cores, which, as we discussed, are more profitable. And they're targeting the power transformer segment more, which often means bigger orders and better margins than the distribution side.
And are they also looking at new technologies like VTL?
Yes, similar moves. They're exploring getting into amorphous metal cores, that alternative high-efficiency material, and also considering forward integration,
Making a
meaning moving further down the value chain, maybe making not just the core, but the core assembled with the windings, a core coil assembly, or potentially even making the whole transformer eventually.
So for JBL, what are the key things to keep an eye on going forward?
Similar themes to VTL, really. How well they utilize the new capacity they've brought online. How smoothly their further expansion plans progress. What's happening with overall spending in the power T&D sector that's crucial market context. And of course, the price of CRGO steel. That raw material cost is always a key variable for them.
But overall, the outlook seems positive for JBL too.
Yes, analysts generally seem positive. They point to the strong growth, the operational improvements, and these strategic moves into higher margin segments and potentially new product areas.
Okay, so let's pull back again, thinking about the whole industry, transformers, components. What are the big picture trends shaping this space in India right now?
Well, the overarching trend is strong growth across the board for the transformer industry. It's being pulled along by that fundamental rise in electricity demand, the massive renewable energy investments, and just general economic development needing more power infrastructure.
And we're seeing the big transformer makers themselves gearing up.
Absolutely. Companies like Voltamp, CG Power, Terrell, Shilchar, the major manufacturers, they're expanding their own capacities and reporting healthy order books. That signals strong demand flowing through the system
And this benefits the component guys like VTL and JBL.
directly. There's a definite trend, as we discussed, towards relying on established, organized component suppliers. Quality standards, compliance, it's all becoming more important. The big manufacturers need reliable partners.
And location matters too, like VTL being in Gujarat.
Yeah, that geographical clustering in manufacturing hubs helps. It streamlines logistics, fosters collaboration. It's an advantage.
The government's big energy goals are like a constant tailwind here, aren't they?
Absolutely. All those initiatives boosting generation, modernizing the grid, pushing renewables, they all ultimately translate into demand for more transformers and therefore more components like CRGO cores.
And it's not just the core power sector driving this.
Yeah. No, the demand drivers are broadening. You've got the specific needs of the renewable sector itself, like special transformers for wind farms or solar plants. You've got data centers popping up everywhere needing huge amounts of reliable power.
EVs, railways,
The EV charging infrastructure, ongoing railway electrification, smart city projects, even defense spending on power systems, plus just a general pickup in industrial capex across different sectors. It all feeds into demand.
we also talked about VTL and JBL diversifying. Is that a common strategy now for component makers?
It seems to be, yes. Expanding beyond just the core product, like CRGO, into related components like radiators, and exploring those advanced materials, amorphous, nanocrystalline. It's about capturing more value, finding higher margins, and becoming a more indispensable supplier.
It sounds like making these components isn't cheap, though. It takes significant investment.
That's a very good point. It's quite capital intensive. You need specialized machinery, precision manufacturing. So having a strong balance sheet, managing finances prudently, like we saw with VTL being net debt free and JBL having low leverage, that's really important for sustainable growth in this sector.
What about challenges? It can't all be smooth sailing. What headwinds does the industry face?
No, definitely challenges exist. There's always competition, both domestic and global. Raw material prices, especially CRGO, steel, and copper, can be volatile. That's a constant risk.
Regulations.
Technology.
Keeping up with evolving regulations, environmental standards, potential technology gaps compared to global leaders, managing supply chain risks, especially global ones, and finding enough skilled labor for an expanding tech-driven industry. These are all real challenges. The industry structure is also still a bit fragmented, though, as we said, the trend favors larger, quality-focused players.
Okay, we have covered a huge amount of ground today. Let's try and crystallize this. What are the main takeaways from this deep dive? I think the core takeaway is this. India's power sector is in the middle of this massive growth and transformation phase. It's driven by huge government ambition, huge investment, and this creates really significant growing opportunities for the whole transformer industry supply chain, especially for specialized players making critical bits like CRGO cores.
And VTL and JBL are right in the sweet spot.
They seem strategically positioned, yes. As focused, listed players in CRGO cores, they stand to benefit directly from these powerful tailwinds, especially with their capacity expansions and focus on quality.
What were the biggest aha moments for you in this?
For me, two things really stand out. First, just how critical this seemingly niche component CRGO steel actually is. It's fundamental to making the entire energy transition work efficiently. You can't just build power plants, you need the grid infrastructure, and efficient transformers are key to that.
Right, it's an enabler.
Exactly. And second, how looking at these two specific companies, VTL and JBL, gives you such a focused way to understand and potentially participate in this massive national story of electrification and renewable energy growth. They're like a direct lens onto a crucial part of that transformation.
That's really well put. So looking ahead, what's a final thought you leave our listeners with? Something to chew on.
Well, thinking about India's long-term energy ambitions and how vital efficient power infrastructure is, it makes you wonder what's next. How might materials science and manufacturing evolve beyond CRGO steel in the coming decade?
Right. Are there other core innovations waiting to happen?
Exactly. Could we see completely new materials or designs that dramatically boost efficiency even further, or cut costs, or make transformers more resilient? What other breakthroughs might be just around the corner in this absolutely fundamental part of our energy system?
That is a great question to ponder. For those of you listening who want to dig deeper, definitely check out India's latest energy policies, take a closer look at the financials and plans for Velas Transcore and JB laminations, and keep an eye on those broader trends shaping the global transformer component market. Thanks so much for joining us for this deep dive.